how do you go from being a struggling trader to making a killing with options? That's what I'm talking to Dan Hayden about. You see, Dan Hayden is one of our students in our new course that we have released. It's called the Passive Trading Formula. And he's been in the course for a few months, and he wrote to me and was very enthusiastic and was very happy with his results. And when I read them, I really could not believe my eyes. I was shocked, and I was like, man, I got to interview this guy. I got to figure out exactly what he did, how he did it, and I have to share that information with you guys. So this episode is an interview with Dan Hayden and how he is learning. He was already an experienced trader. He already knew a lot of strategies and everything, but it was just something in the course that helped him to take it to the next level. And then we're going to help him take it even more to the next level. So if you are struggling, even if you've known a lot of strategies, even if you've done courses or whatever, but there is something still missing, I think this episode is something for you to listen to. Hopefully you'll get something out of it. So let's go ahead, let's cue the music, and get with it. At Option Genius, we believe that you deserve freedom. Financial freedom, so that you have no more worries and more than enough money. Time freedom, so that you could do what you want, when you want to do it. And choice freedom, to live your life on your terms. But the system and Wall Street are rigged against those little guys. So how do we fight back? Well, my friend, that's what this podcast is all about. My name is Alan Sama, and this is the Option Genius Podcast. So Dan, why don't we get started and let me know a little bit about you. Who is Dan? Why you trade options?
Yeah, so my name's Dan. I'm in upstate New York, and I got started trading options a long, long time ago just because I wanted to earn along with the normal earnings of the stock market. And I wanted to kind of complement my trading. Way back when, I don't know how, I think it was from my family, my grandfather, I was drawn to the stock market because it seems like that's one of the ways in order to build wealth. And not to say that I have a lot of wealth, but it's just it's another tool in your bag to complement your normal investing that you're doing with normal stocks.
Okay. So you work full time?
So that's when you and I got in touch with each other because I was actually laid off. I had an awesome job. I was laid off, and I was at the point where I had to decide, shoot, do I just retire now? Do I go back into the workforce? I had an awesome job and loved what I did, but I did travel a lot, and it took a lot out of me. And therefore, it hampered my ability to trade options because I was so busy. And when I contacted you, you had a promotion going for your new program. So right now I am consulting. I do some work on the side, and I am trying to, with your services and system and help, and as well as people on your site, trying to get back into it, trade, develop a strategy so that I can comfortably earn a couple of $1,000s each month is my goal.
Mm-hmm. Yeah, I mean, your story is very, very similar to a lot of the stories that we hear. People have been working really good jobs. They're making a decent amount of money. Their family gets accustomed to a certain lifestyle. And then because of the economy or the company or something happens and, that job, that income is not there anymore. And then the question is, what do I do now? Do I go back into the workforce? And if I do, a lot of times, it's hard to make the same income as you were making before in the same job.
That's exactly right. Yep.
So that supplement income has to come into effect. And then a lot of people come and say, okay, let's, I have money that I have saved up over the years, and how do I make the most of it?
Exactly.
So I'm really excited that you're taking action.
And as we spoke, you and your program has given me the confidence to realize that, all of these services, and I get way too many in my emails, and they're provocative, they stimulate your interest, and you're like, oh, wow, maybe I should join this. Maybe I should do this. And yours, it was great because as I jumped in, it made me realize that, something, I am blocking all of these other emails that come to my inbox. And I don't want to be clouded by they have the best new widget and they have the best this and the best that, because you've shown to me, and I've questioned you, that these other places are making something very, very easy complicated. And you're scanning, your reviewing of the three moving averages and showing the trend, kind of makes it very, very simple to select the trades that are applicable.
Yeah. Yeah. I mean, there are people who are traders, and then there are people who are expert marketers. And
Yep.
sometimes I envy them, some of the other companies, they're like, man, they make hundreds of millions of dollars a year selling their services. I wish I could do that.
Well,
But,
yeah, I mean, it's all what you want too. If you're a really good trader, I always said, if you're really good and you have something that's really, really, a great program, why do you have to charge people right away? Let them get into it and then bill them, And if you're so good at trading, why would you even offer this? Because you can just stay at home, do your trading, and make your money there. Like, why do you have to offer these services? And that's where the suspicion comes in. Like, I just had one, and about a year and a half ago, subscribed to them, and that's when the market kind of turned, and I realized that they're not doing anything different than I was doing in selecting the verticals to trade, and their losses were like my losses on my own, and it's like I can lose my money on my own without having to plunk down $750 or $1,000 or whatever. So when you and I, when I applied to your program, I mean, it was like perfect timing because I was down, I was like, hitting the chops because, you never expect that, you to be, laid off. Never in my life had I been laid off before. Mm-hmm. And I'm like, I had invested and been wise with my money all my life. So I was at the point where I could say, well, maybe I can just stay home and enjoy my family and relax a little bit and start getting back into trading options. And it was perfect timing because you kind of lifted me up and got me back into trading. It's been fun. You have a very practical approach to selecting stocks to trade on. And I also like your methodology of thinking, it's almost like a cycle. You could sell puts on really good stocks that you want to own and collect dividends, because I have another fund that I do that with. Mm-hmm. And you own those stocks, and then you can trade covered calls on those. So you can bring in, if you are executed and, you do now own Verizon with a 5% or whatever it is dividend, and then you start selling covered calls on those. So you have more income coming in, and then you're also doing your vertical spreads. So you have additional income coming in. So technically there's 3 ways to create an income stream, and it just made a lot of sense to me.
Right. Yeah. I mean, so for our listeners, I just want to let you know that Dan is part of our passive trading formula program, our course. So that's what he keeps mentioning, the program, that's the one that he's in. And basically the idea behind that is, like I got to a point where in my own trading where I didn't want to spend so much time watching the markets and watching my trades. Like, you can do that in the beginning. If you're just starting out with a little bit of money, you have to be a little bit more aggressive. And so you have to take more risk. But eventually you get to the point where you're a little bit older or you have a little bit more money and you say, I just want to do this in a more passive way. And so while you can, the myth is that if you're not as actively engaged, you won't make as much money. And, Dan has proven that. What would you say, Dan, in the first 4 months of 2019 or the first 5 months, your paper trading account was up about 90,000?
Yeah, but I do have to take a little bit of that back because some of that I was called out on, and it impacted my results. But I think overall it was like $45,000. So clearly
in about 5 months.
Correct. Yes.
Yeah. On what type of account? What size?
So I did a paper trade account, and I automatically put in I think I put in $250,000 into it.
Okay. All right. I mean, that's a really sweet gain, right? And
right.
How long do you think you spend every day on your trades?
Okay, so that's it's actually changed because from the beginning of the year, let's see, I think we got started in January. Um, I had all the time in the world, and then I just got called for a contracting position. So I am working as a consultant with a company right now. So I've been pulled out a little bit more. So I traded a lot for January, February, March, April. May has been a little bit less. So, I just have to figure out what my time scan is going to be so that I have the appropriate amount of time to be trading. So,
Okay. So do you think that the trades that we're doing require a lot of time for you?
No. And I think, and this is something that I want to learn more of, and I asked on our call last week, is that I want to be able to set automatic stops, which I know you're not a big fan of, but I want to get into a method of basically setting stops right when I set up the trade, so that if I do have to fly somewhere, I don't have to be with the computer. So time wise, not at all. I mean, and even I started with my watch list. You see two watch lists on the left. I started with mine, and then I put yours in as well, and I liked yours better. And now I'm also just scanning through companies that I know there's no premium to be paid on them. So I don't even go to them. I just go to the next one. It almost seems like I'm trading kind of the same stocks over and over again. So even less and less time.
Okay. Yeah. That happens. You develop some favorites
Yep.
and you like the way they're acting. You like the news that's coming out, and some of them might be on your list. You might trade them over and over again for 2-3 years. And then, eventually stuff will change.
Absolutely.
The stock will change. It'll change its behavior, and maybe a new competitor will pop up, or new CEO, or whatever.
Absolutely.
And then it'll drop from your list. You'll be like, I don't want to trade that one anymore. It's not acting the same way. And that's why we focus on that watch list and say, okay, these are the same companies I want to watch every month. And then you get a second feel, like a sixth sense that, okay, it's not acting properly. Okay, let's not trade it this month. Let's just relax and watch it, and then we'll maybe look at it again next month. So
absolutely, and it's also, and I hope more and more people start getting active in your site with interactions, because I've learned of companies that I never even heard of before that have very good premiums, and so it's been interesting picking up a stock here or a stock there that you can start to track as well.
Right. That's why one of the reasons we have everybody put the homework inside the group itself.
Yes.
Because that helps other people,
Yep.
Anytime somebody puts in a homework assignment and says, okay, these are the trades that I found that I really like, other people can look at those and be like, whoa, that's a really good trade. I think I'm going to do that one,
Exactly.
There was a couple that I found from somebody that put them in, and I'm like, oh, wow, I didn't even know this one particular stock was paying that much right now. I was like,
exactly.
Wow.
Some very rich premiums, and that's what we're all looking for. So, so I like it when they communicate, and I think people shouldn't be ashamed or nervous about asking questions, because everybody's starting out at different levels, so that when experienced people can support the young people or the new people just starting out, it makes for a great interaction and a great learning experience in your group.
So what strategies have you decided to focus on?
So I have been doing some naked puts, some selling, and then I started with covered calls, only because I have like a couple of stocks that I have a lot of shares in, and I said, okay, I want to build up some income, but I haven't focused on that too much. So most of it has been vertical spreads and selling puts. If you're on right now, I guess I'm like a simple guy. I got to make it really easy for myself, and what I'll show everybody is basically I'll go through here on the left-hand side, and I'll start with my watch list and the charts. And you'll see here that I have the three simple moving averages, the 20, 50, and 200. And you can see that you kind of want to go with the market, if the market's up,
So on the screen, you're showing your Thinkorswim paper trading account, right?
Correct. Yes.
Yeah.
Yep.
Okay.
And like I said, I think I started with 250, and right now, net liquidating would be 484. So, clearly it's been pretty nice. I wish this was real money, but it's been really nice. And it's just, as you've told me, It's to develop the confidence to basically start cash trading at the right time, because you were very pointed to me, like, how long did it take me to learn my trade, and, because I wanted to go right in. Okay, hey, I've been pretty successful. Can I go right into cash now, And you said, give us some time, get more comfortable, get more, and it's true. And, hey, listen, we're going to lose some money, but if we win more than we lose, we're going to be way better off. So,
Right.
So I'll just scroll through and see which ones are, either above the 30, the 20, 50, and 200, or below the 20, 50, 200. For example, ADM, I'll say no because it's right in the middle, and it's just not one to be traded. AGN looks like it's down, so that's something where you could actually do a call. And so this is Allergan, and I think Allergan pays a good premium. And what I do is I come right over to, so for people who are watching this, what I do is I set up basically almost 3 screens going at once. And you can do this, and I know, Alan, you did this on one of your calls, but you can do this by detaching this layout right here. And so I detached 2 layouts, and all this is to do is just to make it simple and quick, so that, I can scroll through, select ones, and then you see down here on the bottom left, and if I'm scrolling all over the place, I apologize, but I have on my scratch pad basically the numbers that I want for my verticals in order to know that I'm at the 10% level. Okay. So right away, as easy as it sounds, I always okay, I got to look, is this 10%? Is this 10%? So as Allergan showed, it's down. So, I would look and say, okay, let me look at some calls. So I'd go to a delta of, typically we're working around the 10%. So I look between 7 and 14. So maybe go to the 14, which is 140. I'd go over to this page and look at the 140/135. Okay, and it says it's not available. I don't know why it wouldn't be, but maybe it's just uploading. So not available. So let's go to the next one. So I would scroll down all of these. So, this one looks good too because it's above the 3 moving averages. However, it looks like it's dipping down a little bit for AIG. Applied materials. So this is how I would scroll, as you've educated me in looking for those that are either above or below the moving averages. Altria is a good one. I'm trying to think of some of the good ones I'd like. I can go here. So Broadcom, Avago, that's one that I've traded almost every month, and is a pretty good one. So let's go to.
So in terms of the credit spreads or the layup spreads, do you follow the rules as laid out in the course, or have you modified them?
No, I pretty much follow your rules.
Okay.
Yep. And, I probably have gotten a little sloppy this month because, for example, I was going this week traveling and I wasn't on top of it as much as possible. I'll travel with my iPad and leave my computer at home. And my computer is, basically is the best one. iPads, I have trouble, basically executing the trade with Thinkorswim. So
it's not the same thing? Because I know I do it on my phone. So I use their app on my phone. I've never done it on an iPad before.
Yeah, I can't get used to the phone app either. But either one, I'm more comfortable with the MacBook. So I'm going to just bring up Broadcom to see where we are right now. So right now it's right in the middle of these 3. So I would stay away from a trade right now.
Mm-hmm.
Okay.
About how many trades do you put on at a time?
It all depends. It all depends on what's telling me to trade. So like right now there's a put. So the puts are on Altria and AT&T, 2 high dividend players. If I own them, I'm good. If I just take the premium in, I'm good. And then I'll do it again next month. But right now I have NVIDIA, Intuitive Surgical, Campbell, Canadian Pacific, and a Broadcom.
Okay.
So, and you can see here profit and loss. So, these are things that about setting up automatic sells when they hit a certain point. So
let's say you got about 1, 2, 3, 4, 5, 6, 7, 8, 9 trades on.
Yep.
In addition to your covered calls.
Covered calls, I really haven't. I've stopped doing those.
Okay.
And I used to do the covered calls on like these stocks right here, but I was the covered calls to me, I'll get into those later. Like with Alexion, like I have like 1,000 shares of that. So that's the one I really wanted to focus in on. And, but I've kind of put that on the side burner. I'm just doing the puts and the vertical spreads.
Right. So I mean, the thing is like that with the different strategies, you can take and see what the market is giving you, and you can manipulate. If you're in a bull market, naked puts, they do awesome. Put spreads do awesome. Covered calls, if you're not in the stock, if you don't own the stock and you just want to get out every time, then they work really well. And then in a sideways market, I love covered calls.
Which right now, would you consider us being in a sideways market? I mean, we're up one day, down the next, up one day. I would think
right now. I mean, we're still in a pretty good bull market in a sense where we're like a 1% or 2% away from the all-time highs. And so I would say, we're still kind of bullish, especially if the Fed does cut rates again. I think that's, we have all this other news going on, all the noise that goes on in the market. But for the last, I don't know how many years, it's been, the bull market has been there because the Fed had rates so low. I think that if they start cutting rates again, that's just going to signal to the market again that, hey, let's just take it up higher even more. So in my opinion, it's a pretty good bull market. I mean, you can still make money with non-directional trades, but overall, I think I like this type of market where it's going higher, but it's doing it slowly. We're not like shooting up higher.
Yeah.
So not too much volatility, enough for our premium to be good. We can make our 10% on our spreads and not have to worry about too much movement.
Yep. And that might be helpful too, is to say, okay, in a bull market, a slow rising bull market, it's best to trade these, the puts, covered calls, like what would be the best vehicles in select markets. That might be helpful too. I mean, for me, I just, whatever spits out, as I scroll through, and I try to scroll through on Monday morning to determine what I'm purchasing for, for that next, what do we try? 25 to 35 days is like the best time frame, or, a little bit longer. But yeah, so like, for example, Alan, like SPX right now, it's above the 3 moving averages. Okay. So technically this looks like it could be a trade. This is the vertical.
I noticed that when you're looking for trades, you're looking at the monthly ones, but on some of your trades that you already have on, you've done the weeklies.
Yeah. So I try to do it. I think you said the sweet spot's like 30 to 40 days out. So I'll try to go 30 to 40 days out. I think those were set last week. So that's typically why. Like right here, I would look at this 35. And if I'm wrong, you let me know. But, like with SPX above the 3 moving averages, I'd look at the 35 and look over here on the puts.
Mm-hmm.
So I would look at the delta around, I mean, what do you like? You like deltas around 20?
It depends on how many days. I would like to get it as low as possible, but if I'm going in there like about 30 days or less, then the delta increases probably about 20. If I'm at 35, I might try to get like a 15. Okay. But really, we're trying to make 10%, right? So I'd like to get as far away from the money, but still be able to have a potential 10%.
Yep.
So the delta in that case is kind of, I use it more as a guideline, not as like a hard and fast rule that, okay, this is the delta I'm going in,
Yeah. So just to give anybody ideas, I mean, I have it set up so you have the singles on one page, so I can automatically go to what I was looking at, which was the SPX. And I'll go down and I'll look for between a 10 and a 20 delta that brings in, good return. So I would go down here, let's say to a 15 delta, 35 days out, and it's somewhere around 27.20. And then on this next page, I already have the verticals pulled up, so I can automatically look and say, for the 15 deltas, 27.20, I can almost, right away go to 27.20. So 27.20, and so I am doing 27.20, 27.25, which would be right here. And I wish I could show you exactly what the bid-ask spread was, but it could be because of the bandwidth.
Yeah.
But I'd be looking at this area. You got plenty of open interest, plenty of, I mean, it's the SPX, so you can expect that. So I would be looking in this area between a 10 delta and a 15 delta. And then I automatically go over to this is up here. So I automatically go over to my scratch pad to make sure that, whatever I am trading, it has, it's falling, I'm making 10% on that money.
Right. I mean, so that's why I think you need the computer instead of the iPad, because you got so many screens open.
That's probably it, but as you get going, like I'll minimize these screens for the verticals, and I'll minimize the screen for the singles, so that I'm actually overlaying each one, and right away I can go from one to the other and say, yep, that's a trade. And if not, then I go right back over here, click this, and go to the next stock. Okay. And so, if you have a big screen and you're at a desk, this is easy to do. Yeah. And but I'm kind of lazy, so I carry around a laptop and don't want to hook it into an office. And I typically sit on my front porch and make the trades and make my notes.
That sounds pretty sweet, man. Making money on the porch.
I overlook one of the Finger Lakes, so you got to take advantage of that too.
So you told me that your goal was to make about a couple $1,000s a month.
Correct.
And do you think you've been doing this for about 5 months now?
Correct. Yes.
So do you think you have the confidence to start going real money?
I do. I have confidence in the selection criteria, and I asked you, I said, this is way too simple. This doesn't make sense, and, you can get pushed up and above, but you use your rules to get in and get out. You can minimize the losses, because, in this crazy market, anything can happen, macroeconomically, anything can happen, that can impact these markets quickly. So, we can get pulled around, and, I've seen it, and where I get in, it makes sense. They're all, trading, below or above the 3 moving averages. And then all of a sudden the market goes crazy and does something opposite, we've seen it right at the beginning of this year. So that's the only thing that I have to build more confidence on. And I'm working with the Thinkorswim platform, is that when I do make the trades, I am going to start setting stop orders so that if it hits a particular level of a loss, I'm out. And if it hits a particular level of a gain, for example, at 5 cents, 10 cents, I'm just out. I move out. Thinkorswim has a pretty good commission rate, so it's not costing me a lot to get out. At 5 cents, I think it's free, and then I move on to the next trade. So yeah, the confidence is there. Do I get nervous that I don't want to lose money? Absolutely, but you gotta expect that if you have good rules, any money that you do lose should and could be minimized. And that's the one thing that I have to integrate into my trading, because, hey, listen, I had the time to be at the computer every single day, for an hour and check on my trades. But as of recently, I really haven't, because I've been, flying around and meeting up with these companies. So that's why I want to get good with setting up automatic stops.
Right. Okay, so it's about an hour that you said you spend about an hour looking at your trades when you can.
Yeah, that's probably, and it doesn't have to be every day, but probably an hour, throughout the week, and especially if there's some newsworthy events happening, you want to be on there definitely, during that day. Right. But it's probably an hour a couple of times a week. And that's only, that's like managing 7 trades or so, something like that. So it's not a lot of trades, not a lot of time. But, typical to when you pick up this laptop or a computer, I get carried away and I start looking for, let me look at some other good dividend playing stocks. Because I love the scans, like here's one that I did, looking for dividends, high dividend plays. And, what I could maybe sell some puts on. So, so I'll do certain other things while I'm looking at, the trades that I have already open, to try to create other opportunity.
That's because you just love the stuff, right? You're just into it. I didn't get sidetracked. It would be so easy. Just log in, check in. All right, I'm out.
Absolutely. People go on Facebook and all this stuff, and it's great to keep up with that stuff, but I enjoy looking at the stocks, the stock market, and, just trying to pull a little bit from the market into my accounts.
Yep. Okay. All right. What else? I had a couple questions for you in my mind. They just slipped.
See, because you're probably looking at your screens right now.
No, I'm looking at yours. I'm at home. I hadn't even made it to the office today, so I'm just looking at the laptop. All I see is your stuff. But it's funny though, you don't use the Analyze tab. Like I use that one almost exclusively.
Yeah. So before I got with your service, I used to use this all the time because I used to do these butterflies and things that I picked up from all of these services that were trying to get you money. Mm-hmm. And so I started to use I did use this a lot to analyze broken wing butterflies and we used to do iron condors with butterflies in the middle to bring the iron condor up higher, and I'm not the smartest guy at this, but I was learning more and more about this as I started to throw on another trade, either to save things or to increase my profit. But, maybe it's something I should be using more. Do you use it just to see about your profitability and when it does break even and start losing?
Well, I like putting the lines on the chart, but you know how it says there add simulated trades?
Yep.
So I'll just look at that one, and that that pops up the option chain as well.
Yep.
And so I'll go down to a specific delta, and how you were looking at like, should I do this one or should I do this spread or should I do this spread?
Yep.
Then I'll just pop it up. I'll just pick one, do it as a vertical, and then it'll have the numbers down at the bottom. So it'll be like, okay, so the 100, 105 is giving me 50 cents, and then the 105, 110 is giving me 25 cents. And, so I can have 2 or 3 prospective trades on the screen.
Okay.
And so then I'll just leave it there. And so sometimes like I'll do a trade, and there are certain stocks, like I know, like IBM, it doesn't have a lot of premium, but it's a very slow moving stock. So I like to trade it, but you have to get in really early. So sometimes you have to get in like 40 days or 45 days to be able to get a decent amount. Yeah, in order to get a decent return. And so I'll go and I'll check it, and sometimes I'll just leave it there. Or, some other stock that maybe on the chart looks really good, but it's gone up too much or gone down too much. And right now I've put in a trade. I'm like, oh man, I really want to do this trade, but it's only giving me 9%. Oh, geez. Okay. So I'll just leave it there in the Analyze tab. And then maybe 2 or 3 days later or a week from now, I'll come back and I'll look at it again when I'm going through my list, and I'll be like, oh, okay, this one now it's giving me, 10.5%. Okay, I can do it because it pulled back or it moved around a little bit. So that just, it's like, it just stays there. And then if it doesn't work out, then you can just exit out and delete it. So it's not a big deal.
Now, is that in our training videos? Do you have a session on that?
No, I don't think so. That's just something I picked up myself.
That'd be cool to kind of go in your brain and see how you use that function with the ad simulator trades. Because when I went into Analyze, I would always go to the risk profile. And so it's kind of interesting how you use the ad simulator trade. But
I do I like the risk profile too, just to tell me what is exactly the the probability, and then I like to put it on the chart. I like to put my break even line on the chart and just see it.
Yep.
I mean, I know that's like you're fooling yourself because you think, oh, that's so far away, that's never gonna make it. So I mean, you're fooling yourself, but I just like the way that looks.
Yeah, no, that'd be cool. Like for one of your programs, just say this is something that this is how I approach this in monitoring whether I should get into a trade or not to, get into a trade.
Yeah, so we can do that. We'll do that. Let's do that on the next call, on the next coaching call. I'll go ahead and go into the screen and we'll do, several of those. And one thing I also wanted to mention, you got your scratch pad, that's really cool. But for me, to keep it simple, if I'm doing a 5-point spread, I'm looking for 50 cents.
50, yeah.
If I'm doing a 2.5 point spread, I'm looking for 25 cents.
Exactly. That's typically how it gets down. $1 spread, you're looking at $1.
Yeah. I mean, that's a little bit more than 10%. It's like 11% if you get exactly that. But so you can say, okay, I can go down a penny or two. I'm okay with that.
Yep, you got some flexibility. Yeah. You know what else I noticed too, Alan, is when I go to set up a trade and it's a good trade, but it just misses the mark. For example, if it's $1 spread and it comes in at like 0.08 cents, a lot of times I'll put in 0.09 and leave for the day, and it hits. So throughout the day, something happens, or and maybe the stock changes a little, the price changes a little bit, but I'm like, okay, I'm close enough where I'm basically at the 10%, but I'm going to set the 10% and walk away. And I've had more and more stocks that just it fills while you're not even there with a good premium. So
that's a good tip.
Yeah, that's something else that I've done a couple of times. Just hey, this is the time that you kind of experiment a little bit, and
right.
you don't want to nick your percentages, but you also don't want to miss out on a good trade, because there's some weeks where it's tough to find a good trade. Even the consistent ones just aren't offering a premium for some reason.
Yeah, it goes through different ups and cycles. When you have earnings, it's harder to find a good trade. Sometimes you have to go to the ETFs or something. But what you just mentioned, putting in a trade like, okay, I really love it and it's really close, let me try it. And it's not going to hurt you, right?
Yeah.
You put that on, and sometimes because of the way the option premiums are priced, maybe a large order comes in, or the stock moves up and down a little bit, and the premiums just move more than they should sometimes, and you get filled on those.
Yeah. So that's been kind of interesting, and you've made a really practical how to approach it, and also I will say that there's one gentleman who put on the site Excel spreadsheets, which I downloaded, and they're awesome. He has a really great profitability chart, so you can kind of like put the numbers in and it'll calculate it out automatically. I can't remember the name of the gentleman that did it, but really nice addition in your site.
Yeah. So would you, like, if somebody was thinking about joining the course, the passive trading course, what would you say to them?
I would say people can hear what they want to hear, but there's so much pollution out there from these other services. You teach a person to fish so he can feed for a lifetime. And that's what I wanted. I don't want somebody to basically take the steering wheel and drive the car. I want you to teach me how to drive the car so that I don't have to rely on other people. So I would absolutely recommend it. There's as much risk as you want in it, but you control your own destiny. And that's the best place to be in, because I don't want to send my $1,000 to this service and they're the ones picking out the trades, when in all reality, you simplified it to such a fashion that you can join this service, but then you can learn it and move on if you want. Hopefully they stay with you and they believe in you, because I believe in you right now. You've simplified something that quite honestly, as you first join, can be way overwhelming, but you've made it simple. You've allowed for 3 different ways to have extra streams of income, and you teach us to do it, and that's the best thing that you can ask for. So yes, I would definitely recommend people to join.
So that's funny too, because you said you have, you've studied iron condors, you've studied broken wing butterflies, which is like a pretty advanced trade.
Yep.
But you're like, okay, you know what? I'm going to go back to this stuff that actually keeps working. And I'm not going to go so advanced. I'm going to try to make it simple so that it doesn't take a lot of time. You don't have to monitor it so much, and it's just a lot less stressful, I think.
It absolutely is, because the more things you stop placing on, the more you do have to watch the monitor, and the more you have to react and do other things to fix that broken wing butterfly. And the only reason, Alan, I got into broken wing butterflies is because I paid a service to basically teach me how to do broken wing butterflies. And hey, it's probably a really good service, but quite frankly, it's way too complicated. It's not necessary. A vertical spread, if you get good at it, it can be boring, over and over and over again. But if it's boring and your account is growing, that's a good thing. So
yeah. That's how we designed it. We want it to be boring. We want it to be passive so that we can actually go and
enjoy
spend
life,
time doing what we want to do. Yeah, exactly. there are people that want to be on the screen all day, checking their stocks and checking their their trades and whatnot. And there's definitely a place for that. So in the beginning, I tried it that way, and to me, the more complicated it got, the more I realized that maybe I'm not the smartest guy in the room, but like there's so many extra things that I can miss.
Yes.
No,
Yeah.
I'm like, okay, I'm just a normal person. This is getting too complicated for me. So
Yeah.
let's just tone it down and let's take something that works. I know it works. And what I love with you is that, you put in the time, you put on the trades. How many trades have you put on since you
Oh
started
boy.
paper trading?
Um,
Just ballpark, 100, 200, 500.
no, yeah, no, it's not that many. It's probably a little over 100.
Okay. So 100 over
Yep.
like 5 months. So that, 20 a month, that's decent, right? So you're practicing, you're gaining
Yep.
confidence, you're learning the brokerage, you're learning how you like to set it up with the 3 screens and how to monitor it and set up your charts and all that stuff. So that takes a little bit of time. But now I think that you're at the point where, hey, I, turned 250 into 484.
Yep. Right.
That's close to double.
Yep.
That's really good, right? In 5 months, holy cow,
Yep.
So now it's time for you to now slowly transition, I think, into the real money.
Exactly.
Maybe you pick one, or maybe you start with like a small amount of your capital.
Yes.
Whatever amount you start with a little bit. Maybe let's do 3 spreads, and 2 covered calls a month, or 2 puts and 3 spreads, or something like that.
Exactly.
And let it out and.
With a lot less contracts.
Oh yeah, of course. Yeah, definitely.
Here I'll do 10 contracts every single time, and
right.
and there, real money, I'll probably do between 1 and 5 contracts,
Well, I mean, you whatever the amount you have to work with, right? So if you have like 10,000 to work with, okay, I'll do $1,000 in each one, or something
exactly.
like that.
Proper money management. Yeah.
So the contracts doesn't really matter, but the fact that you've almost doubled it in 5 months means, if you were working with a $10,000 account, you would have done the same trades. It would have been almost the same thing. The numbers are just, you just add zeros at the end.
Yep.
For more money. So that's what I love too, that you can start out small, do the same exact trade. You don't need like $8,000 to do a trade,
Absolutely.
Trade, just add zeros to it.
Yep. So, like I have a Roth account and I keep saying, I want to grow that Roth account. And I think what I've decided is that with the Roth account, I'm going to sell puts. And then if it's executed, and I own those shares, I'll sell covered calls really close to the money, basically just keep transferring the stock, take big premium by selling, very close to the money, and if it hits, okay, I'm back into cash. Now I'll sell that put again, really close to the money, take a good premium. If it hits, I own the stock, and now I'll sell covered calls, and I just want to grow that Roth IRA money so that, there's, a significant amount there that's all, tax free, So I've kind of like segmented it there, and then, start with, my cash account in selling verticals. Verticals is what, that's the primary breadwinner, I should say. And then I have an account that has, a company with a significant amount of shares, and I'm just going to sell covered calls on that one. So it's kind of like 3 different accounts with 3 different principles.
Mm-hmm. Yeah. So the company that you just spoke about, I believe you told us what it was earlier. Why are you in that one? I'm just curious.
So I worked for them. So I accumulated shares over the years.
Okay. That makes sense. Are you allowed to sell those if you had to?
Yeah, because I don't work for them any longer.
I see. Okay, cool.
Yep. So in that, part of me thinks about selling them. Part of me thinks about just taking an income each month. It's a
Right.
volatile stock. That's the problem, and so, it can be tough trading, but, if you take chunks and you sell covered calls at different levels, like one close to the money where, hey, I might lose this, but okay, so I just cashed in on, 250 shares, 250 shares, I sell a little bit further out so that I still own those shares. And then 250, I sell a little higher. So I don't bring as much premium in, but I know I'm keeping the shares,
Right. Yeah, that's the thing with, if you work for a company, you kind of have a little bit of an inside track to see how the company's doing, right?
Yep.
Are they hiring more people, or are they letting people off? Okay, if they're letting a lot of people off, then okay, there's something going on. If
Absolutely.
they're hiring more people, if they're expanding, if they spend more money on marketing,
Yep.
You hear all that news that, as a trader ourselves, we might not be privy to all that unless we really dig into the information.
Correct.
To be able to trade a stock that you own because you work there, I think that's like a big leg up.
Yeah.
And even now, I'm sure you still have friends and people that work there that so you can kind of stay on top of that information.
Yeah, but in some instances, but then again, it goes to show that the market will do what the market wants to do, because I've been around when we've had awesome quarters and we got hit by the market, we lose, so
Yeah.
nothing's a sure thing. And I remember those days where we'd have a blowout quarter and we were down 10 points, and it made no sense at all. So, so it's, yeah, it's good to be, kind of affiliated with it, but it's also, they can throw you curveballs and make it very frustrating too.
Okay.
So that's why go in thinking about vertical spread straight up, and then whatever else you start accumulating through your puts, sell covered calls on, have a method to start creating your stream of income in 3 different ways. The way you trained us I think is a beautiful way to begin growing your stock accounts and making money passively.
Yeah. And thank you for saying that. And like one of my goals is like, the stocks that I buy, I want to get them for free, like I want to get so much money back from them that they're like, I didn't pay for them. I got my money back.
Exactly right.
You're playing with the house money, and then whatever happens. I'm okay because I got my money back.
That's exactly right. And that's why I think young people should be doing this as quickly as possible, because they have the ability to do that, and, doing it over and over again, taking in the premium, which reduces the cost of the stock. And then you're saying, hey, it doesn't really matter because I bought this at this, I've taken this much in, and basically I own the stock for free. So,
and then it doesn't matter if it goes down, goes up,
no,
you're getting a dividend. You're like, okay, I'm happy,
Exactly. Yeah. Yep. Absolutely. And you still have the shares, so do whatever you want with the shares.
So what would you say is the biggest thing that led to your success?
Well, success is kind of, that's.
I know you're being humble, but seriously, close to double your money in 5 months. I've never done that. So you're doing something different. You're doing something special. What do you think caused it?
For me, it was just finding out, like I needed a method I just wanted like a recipe, like give me something that is easy, that I can select stocks that make sense, and then doing it, So it was basically, providing the methodology, which I have because of these 3 simple moving averages, and then executing. And that's it. It's not rocket science. And, success, this is paper traded. So, you might get a little bit over ambitious with one trade over the other because it's not your money. But just, to me, the most important thing was developing that method, having confidence in knowing, hey, if it's above or below that 3 moving averages and the stock's trading up and so is the marketplace trading up, it's a good sign that this is going to be a good stock to trade. Now let's look at what the returns can be. Let's look at the verticals, let's look at the individuals to find the right delta. Having that method to basically weed out what you should be trading.
Yeah, a lot of people, when they first hear about it, they're like, it can't be this easy. I think you said the same thing. It's like,
I did. Yeah, I wrote to you and I said, there's got to be something else I have to throw in. And you see my screen. This is from the old days where I'd be looking at volatility, standard deviations, ADXR. Like I tried to come up with the best technical analysis in seeing is the stock, anticipated to go up, down, what, and you don't need this. This was the olden days, where I had all this stuff at the bottom and I've just never turned it off. But,
right.
You could take out all that noise and basically just look at the charts and have confidence in what you do. You're going to have curveballs thrown at you every so often, but be ready for those curveballs and get out with minimum losses and you'll come out way ahead.
Yeah. And I think that's where like asset allocation comes into place, especially with the different strategies. Yeah. So like, if you're only doing spreads and you're only doing put spreads because the market's going up, but then it drops, you're behind an 8 ball. You're in trouble.
That's right.
But if you're doing a little bit in the puts, a little bit in the calls, a little bit in the spreads, a little bit in something else, then you can weather the storm. It's not,
correct.
One trade will be doing good, the other trade will be not so good. So,
correct.
Because I think because the way we talk about it is, every month has the potential possibility of being a very good month.
Yep.
And so if you have a good month and a good month and a good month and a good month, but then you have a bad month, which is going to happen, if you do it right, then the good months will overcome the bad months.
Absolutely. Yep. Yep.
And so in the long run, if you look at it a year, 2 years, 3 years down the road, you'd be like, okay, I'm up a lot. This really
Exactly.
And
well, it just
some people look at it and say, I tried it for a month and I lost money on 2 of my 6 trades. So this sucks. And it's like, well,
Yep.
That's not the way it works.
Exactly. And you do have, even the professionals lose, and so you just have to know how to minimize those losses. And that's the biggest thing. And that's something that I have to do. You can see some of these losses that I have to be more proactive in setting up my losses when I set up my trade. So the minute that trade hits, I got to go in and say, okay, I got to get out when it's profit of this or a loss of that. And that's all in I don't have my notes with me, but it's all in your notes for these losses. And, and I brought up this screen here that shows my puts, so I have Altria. And I'm okay. I'm okay if I own this. My fear when I put a put on, like you just talked about earlier, is suppose, something happens, macroeconomically between, okay, they decide not to lower rates, Iran, does something, China does something, and it drops heavy, like Altria goes below that 47.50 put. Well, now I just bought it at 47.50, but it's at 45. That's a hurt. So the only thing you can do to get away from that, because you're fully exposed when you do this, is just to start selling calls close to the money to say I either get out of the Altria and take a minimal loss, or I'm good because I believe it's going to be coming back, and plus I'm making my dividends.
Mm-hmm.
So because that's, we talked about fear, how, as a trader, you're fearful of losing money, well, I'm fearful of having to buy Altria if the market drops hard, or AT&T, the market drops hard, and I'm buying it higher than the market is actually at. That's, that's a fear that I have,
Right.
But,
right.
If you stay on the sidelines, do it, you don't get your dividends, you don't get the opportunity to buy these stocks at a discounted rate.
I mean, that's why we do the paper trading too, because it actually do it for a few months and you'll get a better idea of, okay, how many times did I have to buy the stock?
Yep.
I did it 5 times. I never even came close. Maybe this fear is a little bit unwarranted, you know? So maybe if I do it with real money and I do it for a year, 2 years, 3 years, maybe I'll get the stock once. Or twice. And then, and that's why with the paper trading, I'll advise everybody, get in trouble, put some trades on that you wouldn't to get in trouble with it. And so that you can see, okay, how do I navigate my way out of trouble?
How does it respond? Exactly.
Yeah.
Yep.
Like with Altria and, AT&T, okay, maybe I'll sell a at the money put.
Yep. Just to see what happens.
Just to see, okay, I have to buy the put at this price. What do I do now? Oh, I bought the stock. Okay, how do I get out of that?
Yeah.
Right.
Yeah. Because the worst time to trade is when you're in fear. You have something going against you and you're nervous. That's the worst time to place that reactive trade.
Exactly.
Yeah.
Exactly. And a lot of this stuff is we're dealing with stocks as well. So, if you own the stock, there's a great chance the thing will rally in the next 10 years, So we're not, I know if you're only trading options, then you lose and the month expires, then that's it. That loss is yours. You got to eat it. That's, you got to make it up next month, the next month. But with the stock, you can always come back. So,
yep, absolutely.
Cool.
Yep.
Is there anything else you want to share?
No, I greatly appreciate what you're doing and helping others. I mean, I really have learned a lot from you, and I do have the confidence again, in getting into, option trading and having a good plan for doing that option trading. So thank you.
Great. Yeah, I'm excited to see how you take it and how far you go from here.
Yeah, me too.
I mean, you got the foundations down, you got some basics, and now it's time to, start doing it.
Yeah. Well, it's kind of funny too, because, now that I'm working with this company and doing consulting with them, I have income coming in. So it's like, okay, well, I don't have to bring in income, with the option trading as much, so that psyche comes into play where, okay, when I wasn't working, I said, okay, I got to make sure that I stop bringing in X number of dollars a month, So now, now it's like, and that's why I'm not I shouldn't say as serious because I do look at the charts and all that stuff. I track it probably a couple of times a week. But when in January, February, March, when I wasn't working for any other company, I mean, I was looking at opportunities, every day. And I was very, very religious about it. And so, it is that psyche, but, all I can recommend to everybody is even if you have a full-time job, slot out, 15 minutes, 20 minutes, an hour if you can, just to monitor your old stock, the shares, the trades that you have on, but also to look at new opportunities, elsewhere. And, but kind of get dedicated, almost like, I have a system now by scanning, by reviewing the chart, by reviewing the delta, and by reviewing the return. So I have a method in that way, have a method each night, each day, to give yourself a couple of minutes to look at the trades and to scan so that it becomes second nature, and that's the best thing to do.
Mm-hmm. Yeah, definitely. And like you said, with the mindset, when you don't have any income coming in and you have to make your nut, maybe $5,000-$10,000 a month, that's when the stress really hits you from the trading.
Yep. That's
it's
right.
like, oh my God, this trade has to work. It has to work. And that's when you mess up.
Yep.
So when you have, even a little bit of income coming in and you're not totally dependent on your trades, then it allows you to actually trade better.
That's exactly right.
So that's very helpful, especially when people are getting started. And I've seen some people where they jump the gun too fast and I want to be a trader, a full-time trader, and they jump too fast into it. And they're like, I have to make money every month. We had one student who did that, and the stress just got to him, and he placed trades that he shouldn't have, and then he lost. It just, on a mental standpoint, it just sends you for a tailspin.
Yep. Did he need that money, or was this supplementing his income?
No, he had quit his job to trade full time, and so he overtraded, I believe, and then he lost some money, and now you have to cut back on your lifestyle when that happens. So it's not something that he has the skills. He'll be back. I'm sure he'll be back. But it hurts in your mind, like you feel really down about it. So that's why I love it that you're starting out and you're saying, hey, my goal is to make $2,000 a month.
Yep.
Well, okay, if I can make 3%, 5% a month doing something pretty safe, $2,000 a month, I don't need to have a big ton of money, right? Yep. I can put a little bit of money, make my goal. And then, once you get to that goal of 2,000, then you say, okay, now my goal is 3,000. Now my goal is 4,000. And then eventually, you can actually go and say, all right, I don't need the consulting anymore. I'll just do this. If you love it, hey, you go do the consulting too.
Exactly.
It's up to you. It's your choice. So I think that's.
And it's like, this isn't something where you're gonna make a ton of money tomorrow. It's not the day trading. It's not that heavy. It's not that that risky type of a trade. This is something where you get good at it and you bring in a little bit each month, and then like you just said, you bring a little bit each month. You get good at what you're doing, and then you get the confidence to say, okay, I'm going to now trade 2 contracts. I'm going to trade 3 contracts. Because if you quit your job and you're getting stressed out because you're losing money, then you must be risking too much, because you shouldn't be risking too much. You should have proper money management. This is my own opinion, but you shouldn't have that stress. Just like you shouldn't be like, hey, I am so good at this, because I've had all these, I don't consider myself good. I consider myself that, I've got a new training system. So I consider myself a little bit more confident, but I'm not good in any means, but you shouldn't take chances. This isn't gambling. This is, proper investing and trying to create a passive income, and that's all it is. It's a passive income.
Right. And, as you venture more into the real money world, you know that, hey, I'm always here. You can email me. You can, we can do the coaching calls or the Facebook group or the community, whatever. So that there is some support there as well. So
absolutely. Yeah, no, you've gotten back to me and slapped me in the hand a couple of times, and and even going on to your site, there's I wish there was a little bit more interaction between the members, because that's where I learned, and I picked up that Excel spreadsheet from your one member. I love reading it because it's like, okay, give me, I want to learn more. I always want to keep learning. But I felt, hey, I've got these trades. I've really done pretty well. Should I start doing cash trades now? And you said, how long did it take you to learn your skill? Your lifelong skill. He said 30 years. He said, well, it's going to take you a little bit longer to get comfortable with the practice trading, So
yeah,
so
give it a couple months.
yeah, the support's there, and you do get right back to it relatively quickly. So I think it's on our side now where we have to start interacting a little bit more, coming up with, hey, this was successful to me. This is what I was looking for. This is what I got. Oh, this didn't work out for me. What should I have done differently? Things like that.
We're working on that. I mean, right now, the course itself, we've only marketed to our own list. So we haven't really gone to the public with it. We haven't let a lot of people in. We only open it up like once a month for a few people, a handful of people, and then we shut it down again because I'm working, with people and we're working it out. But once we do expand it a little bit more, I'm working on a couple projects coming up that will definitely, we'll open up the course and we'll have a lot more people in. And once we do, then that interaction will grow. Currently I'm working right now. My major project is I'm working on a book called Passive Trading.
Yep.
So, once we get that book into people's hands, they'll see, like, hey, wow, this is awesome. I never knew I could do this. And a lot of stories in there from students who are doing really, really well. So I think that'll help as well.
That's awesome.
Once we get more people in the group, then it'll definitely pick up. But I appreciate you, posting in there and doing stuff. And even on the call, I appreciate you coming on the call and sharing your knowledge and your experience.
It's knowledge, like I said, knowledge and, successes. It's in these net liquidating trades and overall profit and loss, I can't figure them all out because there's other trades that came into play with it as well. So, it's, I'm probably 10 grand a month or something like that in the profit. So that's pretty good since I started.
Yeah. And, you started like 5 months ago. So I think that's pretty good.
Well, it's exceeded what my initial goals were. And if I can now moderate, kind of taper it down a little bit with my cash, because I'm not going to be as aggressive and all that stuff, especially to start out with. But yeah, it's been a lot of fun to learn. And that's the best thing about it, is that I'm not having somebody else have to tell me what to do. I'm learning it. And that's why I'm appreciative of that. Thank you.
I mean, you could do this for like the rest of your life, as long as, we get older and, we think we slow down a little bit and our arms don't, back hurts and this hurts and that hurts. So, working a job or doing all that traveling might not be an option. But sitting on your porch, like you said, with your laptop, you'll be able to do that for a while.
Absolutely. And if I can get good at this and then teach my kids how to do it, that's,
game changer.
A game changer is right. So.
That's one of the things
I'm proud of too, because you're taking something that's complicating, making it simple, and teaching others to do it. So that's great. Good for you.
Because this stuff has been around for a long time, but with the advent of the internet and the brokers, and now it's like everything is at our fingers. It's like anybody can do this from anywhere around the world. So it's really opened it up for us as individual investors, and I think for our kids, it's just going to get even better.
Right.
They'll have, we're limited to like, a little bit of the U.S. stock system. I think when our kids are older or whatever, they'll be trading around the world. They'll be trading on the moon. It's going to be crazy.
It's true. No, it's true. Anything's possible, and it's amazing because the times that I've gotten into trouble is the times that I haven't get out of trades because, it's going to turn around, It's, certainly can't keep going down. It's going down 2-3 days in a row, and you think it's going to turn around. But if you play by the rules, you have your rules, that's where you don't get into trouble and you're out. You're saying, hey, I'll take this little hit. I've made a little loss, but I'll make it back. Or I made it on the front side, almost like, your puts, you've owned these stocks and you've gotten so much premium that you own it for free, so how much damage can be done? But, there's no need to take risks, to take chances, and if you follow the rules, when to get in, when to get out, it's all good. You're going to have minimal losses and maximum gains.
Mm-hmm. Yep. So, and you just play it month by month, year after year. The returns, they take care of themselves pretty much.
Yep. And you get so bored that you just say, oh, well, here's Monday again. I got to go make some money.
Well, that's the biggest thing, right? That's like one of the biggest risks is that you get bored and then you don't pay attention. I've noticed that when I first started out, I would put on my trades and I'd be like, oh, nothing's happening. All right. And then, oh, nothing's happening. And then I'll just forget to check them. And then, oh, something did happen and I didn't. Oh, don't worry about it. It'll be fine. And then that's when you get in trouble, when you get too bored. So
and that's where I am right now, because as I'm traveling with this other consulting, I'm like, you're kind of like bored because, well, I made this much money, and if they go wrong, I'll just set up new trades because it's paper money. But I got to get more disciplined in my paper exiting, so that, that's the last part of, to me, that's the last part of my training right now. It's just setting up the trades as I enter the trades to get out. And,
well, you have Thinkorswim, so they have something called OCO orders. And
correct. One cancels the other.
Yeah, most brokers have something like that. If you call them up, I'm sure they'll walk you through how to set it up, or they might even have the videos on their website.
They do have videos. Yeah, they do have videos.
That show you how to do that. So if that's what you're looking for, there is a way to do it. Or if you want, you can just have them alert you on your phone.
Yep. Yes. Yeah, you talked about that last week, which is awesome. You can have them text or.
So there's ways to around it if you want to find it that way. And then it's like totally automatic, put the trade on and then just put the order. Then, okay, I'm done. I don't have to do anything at all.
Yeah. I lost, but I only lost a couple of $100, Yeah, I gained and I made $500, whatever it is, So yeah, that to me, that's relaxation, because you don't have to, in that heat of the moment when, oh my gosh, it really turned against me. Now I'm down, $300, what do I do? That's the wrong time to be making the decision, so yeah. So if the decisions can be already made for me, all the better.
All right, Dan. So that's all I had. I appreciate you coming on. Do you have any last words for our listeners?
No, thanks, Alan. I appreciate it. Keep up the good work, and we'll be in touch.
All right. So we'll see you, we'll regularly interact in the group. And if you need anything, please let us know.
You got it.
All right. Thanks, man.
Thank you. Bye.
All stocks are not created equal. We've analyzed thousands of optionable stocks to find the very best ones to trade options on. Lucky for you, you could just download the list for free. Get it at simonsaysoptions.com/stocks. Again, that's simonsaysoptions.com/stocks.